Perfect.
Now we would like to welcome our next guest speaker, Mr. Paul Lee, the head partner and global head of research at TMT Industry Deloitte. Please.
Thank you very much to Al Jazeera, and welcome to everyone to this event. It's a big honor to be invited to speak here. Now, just to introduce what I do at Deloitte, because you might be thinking, why is an accounting firm talking about digital transformation? So my role at Deloitte is I look after the research we do into technology, media, and telecoms, and that is all I do. So for the last 16 years, I've worked at Deloitte in this role, trying to understand what is happening in this incredible market where you have the fusion of media, of technology, of telecoms advance, and trying to understand what this all means is absolutely fascinating and very confusing. And a question which I think all of you are asking will be, what is it we have to do? And to understand that, I think you have to understand what questions you have to ask. Now, I expect many of you will have been to many events like this, not as grand as this, not as prestigious as this, but at many of these events, the assumption has been digital is coming, therefore everything is going to change. Now, what I would say, based on the data that we have seen, based on the research that we have done, is definitely digital will continue transforming everything that we do. But in many regards, digital is also complementing what I do. So in the next 25 minutes or so, what I'd like to cover off is what I think are some of the key questions that you should all be asking and seeking answers for, and provide some of the answers that we've seen from research that we have done or that other entities have done on this topic. So one of the questions is around digital transformation. This topic comes up every year. It's come up every year for the last 2 decades, as far as I can recall. I expect it will come up for the next 2 decades. And when we look at some of the elements of digital transformation, now, we saw in the presentation earlier those mobile phones from the 90s. It's amazing how much faster networks have become over the last 20 years. The only way you can really understand how radically connectivity has improved is by switching it off or reducing it to the very, very, very slow elements you might get, say, when you have satellite-based plain Wi-Fi. Then you understand what you had, just how fast things have become. Now, when you look at this chart over here, remember, 20 years ago, you had modems. Now, if you look at this chart here, it talks about 1 gigabit per second for 2025. That was the projection a few years back. But in Korea, you can get 1 gigabit per second to a mobile phone. Later this year, in the US, 3 of the carriers will be able to deliver 1 gigabit per second to a mobile phone. Do you need to have satellite trucks anymore? What is it that 1 gigabit per second to a mobile phone will enable, where it works, and how extensive will it be? So all of these things are going to continue happening, and there are upgrade paths for connectivity for the next few decades, which will get into the tens of gigabits per second, should you need it. So this element of digital transformation is not going to come to an end. There is a lot of technology which is already being planned, which will roll out over the next decade. So the other technology which is really improving is, of course, processor speed. And it continues to improve exponentially. And again, what is it that people want to do with it? And I think back to the late 60s, when you had the first people on the moon. And the lunar landing module had a slender processor in it, and it had a tiny amount of memory, 48 kilobytes. So now we all have supercomputers in our pockets. How do we use that kind of technology? How is it going to improve over time? And when we think about, so what is coming in this year in mobile phones? So what is new? So there are a lot of people in industry who are going, smartphones have reached saturation. They can't get any better. I think in terms of the physical form factor, smartphones won't get any better, but inside, they will get faster, they'll get more powerful, they will get cleverer. Machine learning has moved from the cloud via mainframes to laptops and is now becoming native on smartphones. And the smartphone is the revolution of the last 10 years for a lot of us, for the mass market. So 10 years ago, there were no touchscreen, full touchscreen based phones. They were yet to be launched. So next month, it will be the 10th year anniversary of the public launch of the first big touchscreen-based smartphone. And at that time, we didn't know what we would do with that technology. I think at the moment, we don't really understand what machine learning on a smartphone will do. So from a news perspective, will it allow articles to be written by the machines themselves? There's already quite a lot of use of artificial intelligence to create basic stories about results. So can your phone start to become a journalist itself? And the growth of the smartphone, so there's 1.5 billion units sold each year, and the amount of time spent on the smartphone are making people ask the question, will mobile eat traditional media for lunch? So is mobile going to subsume everything? So all of you probably spend more and more time each year on your smartphones. What does that mean? Now, what I want to do is show you some data from the US. So this is from Nielsen from the third quarter of 2016. So these are some numbers for 2014, 15, and 16. And what you can see for 2014 is time spent on a smartphone, app, or web, on average, was about an hour. A year later, it was 1 hour 14. A year after that, 2 hours 10, so over double the time. What does that mean? So when you look at those numbers in isolation, it is a scary trend, a doubling of time spent within 2 years. What does that mean? What are the implications? What does it mean for traditional media? Particularly when you think that so much of news now is being disseminated by social networks. Should you be petrified? Now, looking at data in isolation is quite interesting, but I want to show you the rest of the data over here. So what you can see, the red column is live television. Look how much that shifts over that time. The green column is AM, FM radio. So that's analog broadcast radio. And again, over this period of time, you've got 6 hours total time spent on average consuming live content. Why is it? Now, you may well be going, I don't behave like that. My children don't behave like that. But the thing is, we will all tend to, as humans tend to do, associate with or work with, socialize with people who are like us. But like us is a microcosm within the mass market. And that's something which I think we should never forget. You know, us is a tiny group of people. There are lots of people who are quite happy with live consumption. Now, it's live consumption, despite the fact that the capability to use on demand is getting easier and easier with each year. So looking at the US market, there was recently a transaction in the US, so for New York, one of the cable companies, and a condition of the acquisition was the minimum broadband speed that we made available to customers in that region was 300 megabits per second. So that's 300 megabits per second, and all you need to do HD on demand for drama is about 2 megabits per second. So the ability to ignore live is there, but the demand may not be. So that's worth bearing in mind. So, and the last thing I'd say is one reason why the orange container can grow so much is what we forget is that the smartphone is a frame. It's a container for so many different activities. And often we'll go, well, I consume news within an app on a smartphone, but you do so much else. So when I'm on the road, I'll spend hours on email within an app. It's not healthy, but that is probably going to be typical for a lot of you. So you will spend hours doing what you used to do on a laptop, but it's just shifted to a different device. And when you look at the consumption, of course it's going to swell. And when you book a ticket online or sort of check it online, or you check the weather online, or you do your banking or navigation, all of it fills that container. So of course it's going to grow. But a lot of it is just behaviors going from being not counted to being counted. Now, one other thing that I've heard for the last decade is people will consume video on mobiles in the future. Now, I'm not sure that that will happen, except when it comes to short content. So people look at their smartphones many times a day. So a lot of you, I expect, will look at your smartphones 50 times a day. But the total time you spend on your smartphone may not be that great, because often what you're doing is glancing at your phone. You're not spending extended periods on your phone because the screen is small, because it hurts your eyes. It requires more concentration. So short-form video works very well with small screens. Long-form may not do. And it may not change just because our eyes cannot cope with looking at highly produced video on a small screen. It's no accident that this screen here is so big, because it's easier to take in the content. Now, just doing simple maths. So the largest smartphones right now are about 6 inches in size. Very few are that big. A lot more are about 5 inches in size. Televisions are becoming a lot bigger. So a lot of televisions, which are on sale in the UK, so there's small ones, and the larger ones start at now about 49 inches. 49 inches is equivalent of 67 large smartphones, 67 phablets. Now, when it comes to consuming long-form video, will people go for the big screen or the small screen? In the long term, I think it'll often be the large screen. Now, thinking again about the smartphone, how does a smartphone complement the big screen? So if one of the forms of funding is advertising, what does the smartphone do for that? And in all the research that we have, one thing that we see is a lot of people combine the television with a smartphone. The television is something that you receive information from, and you give instructions to your smartphone, such as searches. You go onto websites. So the combination of the television and the smartphone is a very powerful combination, but the power of that combination hasn't been fully utilized yet. Now, you may be thinking, I've talked about 6 hours of live media consumption in the US, but surely it's just old people. What about young people? Young people don't watch live media. Is it the case? Now let's look at some numbers as to what's happening. So this is some data for the US. And the top blue line is the number of minutes spent by 18 to 24-year-olds watching traditional TV in the US. So it's declining, like it is in most of your markets over here. Now, what you should also note is the annual change, which is the line in red. So you can see the annual change is declining and has declined for 8 quarters. So at some point, it may flatten out. So that's one other thing to bear in mind. Is it the case that there is a bottom that we're approaching in terms of consumption watched? But the other bigger question is, in a lot of countries is, so if you have declining viewing audiences for young people, what else is there that can reach young people? And the answer often is social networks. Social networks, they have fantastic reach. So let's look at some data again here on percentage reach amongst 18 to 34-year-olds in the US, so amongst millennials. And you can see that you have a range of social networks there. Time spent is actually pretty low on average per day, except for Facebook. Facebook is 1,000 minutes per month plus. 1,000 is a big number until you convert it into daily consumption. And daily consumption, you can see over here, for the US, 18 to 34-year-old measured consumption, so not self-declared, this is not an opinion poll on what people would like to say they're doing, this is measured consumption, you've got 147 minutes versus 35. Why is it? Because people glance at social networks, whereas they gaze at long-form television. Small screens, big screens. That is the ratio which is there. Now, going back to young people, what is it young people do? So this is some data for the UK. Again, it's measured data by BARB. So it's based upon automated measurements of what people do. And what you can see quite clearly is younger people watch less television than older people. Now, does that matter? So older people, people in their 65 plus, watch close to 6 hours per day. That's partly a process of evolution, aging. You become less mobile over time. So you retire in the UK at 65 at present. 65 plus is 20% of the population, 20%. And it will grow. Well, that's a forecast that it will grow. Now, in terms of the wealth, a lot of the wealth is now amongst those in their 50s. That's where the wealth is. So for advertisers, where do you want to advertise? Who should you be advertising to? It used to be that you'd advertise to 18 to 34-year-olds. You get them young. What about now? So for markets where people in the Middle Ages have the most wealth, who do you advertise to? And that's a key question. So how will media be funded? And there are multiple forms of funding. So as well as government funding, you have ad funding and you have subscription pay TV. And the pay TV market has been growing at a global level for decades, but may probably hit a speed bump over the next 2 years. Now, one of the sources of funding, a big source of funding, is advertising. About $250 billion industry. So in the US, $72 billion. Now, to put that in perspective, $72 billion is multiples of the revenues for subscription video on demand subscribers worldwide. So it's multiples of Netflix and a portion of Amazon's revenues from that. Now, the reason why we think it's interesting that for the US the revenues are flat is because it's a post-election year. It's a post-Olympics year. So normally, revenues should decline this year. Now, the reasons why it remains strong is because you have broad reach, you have stable high viewing volumes, you've got some rises in CPMs, so the amount paid per minute or per 1,000 viewers, and time shifting isn't that great, giving on pay TV isn't that great. So those are the reasons why advertising remains resilient. There are some advertisers moving money back from digital to traditional TV because they want the reach. That's what they're after. They want the reach. They want to be able to build that. And talking of reach, so in the UK, of all commerce, about 20% now is e-commerce. So it's the highest in the world. So we have the highest spend in the world, the highest proportion in the world. And as of last year, the biggest category of spenders in the UK are e-commerce companies or e-commerce divisions. Now, the reason for that is for B2C, if you want your brand to be known, if you want to reach 3 million plus audiences, you have one option, which is television. There is nothing else that you can use to get to that audience. You can't use any digital format to reach that size of audience simultaneously. So think about, what about in your countries? And the reason for that is because press used to be really big. So it used to be that if you wanted to reach millions of people, you could do TV or press. The highest circulation newspapers now in the UK, daily newspapers, are about 1.8 million for the Daily Mail and about 1.6 million for the Sun. That's the highest reach. So if you want to reach millions simultaneously, you have to go for television. There is no option. So there's been quite a bit of inflation for television in the UK, although this year will be soft, but that's more linked to the state of the economy. Penultimate topic, is all media going on demand? Now think back 10 years ago, if you're in a TV conference, a topic would have been, an assumption would have been, as we move on demand. So 10 years ago, there was a big review in the UK on digital. And the assumption was most consumption would be going on demand. Now I want to show you some numbers in terms of what's happened around Europe and the US. And what you can see in terms of consumption, for the US and the UK, you've had a big decline in measured consumption. A big decline. Now if you look at the other markets, a lot of which are very fast broadband markets, demand is pretty flat. Why is viewing demand so flat? So you've got declines, but there are a few basis points. They are not that big declines compared to other traditional media. Why is it the case? And for the US and the UK, one reason why it's quite high is because those are the markets where you've got the best correlation with subscription video on demand, because a lot of content for Netflix and Amazon Demand is created in the English language, and so resonates most strongly with those markets. So a question is the UK here an outlier, or is it a trend which others will follow as broadband speeds get greater? So one other data point, this is the number of requests which the broadcasters have had for their on-demand content. And what you see here is a nice, healthy growth curve in terms of on-demand requests. So how much does all that represent? The iPlayer has been around for 10 years. So in total, all of that is about 5% of all measured consumption for those broadcasters. 5%. The remainder is live, or it's watched played back from a set-top box. And just going back to this number over here, just a reminder. So what you've got here for the US now is strong consumption of live content. So it's barely varying in that time period. Now, one of the other backdrops of the last 20 years has been there's been a growth in new brands, of which one is Al Jazeera. But you've also got digital upstarts. So you've got companies like BuzzFeed, Business Insider, you've got the Huffington Post. And some of the best commentary I'm seeing on the UK election at the moment is coming from really good journalists working at BuzzFeed. So it's not just a list of what you should do if you're in a city. There's also lots of very good journalism. But how well does that pay? So here's some data from 2015, and the combined total in terms of revenues is about $400 million. So let's add 25% onto that, $500 million. How does that compare to the news industries in your countries right now? And then also in terms of brands. So this is TV viewing in the UK in 2016. And what is the share of the traditional broadcasts? So looking at that, you've got BBC, ITV, Channel 4, Sky, Viacom, and UK TV. So all of them have about 85%. If you take off UK TV, then you get sort of the more, sort of like a smaller cut, it's 80%. The top four, 72%. So you can see that the demand is very, very strong. Viacom, BBC, ITV, and 4 together are the traditional PSB broadcasters, so the public service broadcasters, 72% of all consumption. So one thing which I would advocate is this view that traditional and digital can coexist. They can be the best of friends. And one of the digital elements is biometrics on smartphones. You might think, what's that got to do with media? The connection is, so biometrics have become very pervasive very quickly. So there's probably 1 billion smartphones and tablets out there right now which have a biometric sensor to read fingerprints. That enables very fast authentication and secure authentication. So with one press of a button, you can pay for something. When you're watching television and you see an advert and you see something you want to buy, you can then go onto a website and you can pay for something with a press of a button. You do not have to enter in credit card information all over again, because what you're authenticating is the use of the credit card details on your phone. To what extent are you exploiting that? And when we look at, for example, the business models for news, we talk about subscription, we talk about ad funding. I think there is a third way where you allow people to pay for a newspaper in the way they may have done for years before or even decades before by just paying $1, £1, €1 for the day's paper, but making it as easy as it used to be when you went to a news kiosk by pressing a button. Rather than requiring somebody to sign up to a subscription, which is going to put some people off. It's going to be too much work, and they will rather not read than consume. So this year, we're expecting that sensor to generate 10 trillion usages this year. Could you be using some of that usage to generate an application or a service of some kind? So traditional and digital can coexist. And here are just some observations from the research that we've done on what we think this means. So digital transformation, this will still be talked about at conferences like this in a decade because it will never end. But digital transformation does not mean zero-sum disruption. It's not about them and us. It can be them and us. Sorry, them versus us all. So second thing is, the smartphone is a wonderful device which will continue to iterate, even if it will still look the same in 3 years' time as it looks now. On the inside, it will be far more powerful. But to what extent do the smartphone and television or radio complement each other? What is the degree to which they complement? A third factor is traditional media consumption is dominated by older people. How can you take advantage of that? To what extent does it matter? Fourth point is demand for on-demand will without doubt continue to grow, but it may never predominate, and it may not matter that it doesn't predominate. So people who have very busy lives will do most things on demand, but there are many people who don't have that many busy lives or who want to have relaxed times. And also bear in mind that consumers love choice. They love the ability to be able to choose from a wide palette of options. But they may not always like choosing because that is tedious. So if you go to a good restaurant which has an extensive cellar, you want somebody to help you choose what you want from that extensive cellar. The next point is advertising. So traditional scattergun advertising, is there value on it? Does it all have to be targeted? Or is there still a lot of value in traditional advertising, which is just about getting your brand out? And when you think about television advertising and its ability to track what people do as a response to it, how would you feel if you'd be able to see somebody seeing an advert for a brand and 6 months later making a purchase from that brand? Because you can do that right now. There are companies doing measurements which can see what you watch, what you browse on, which apps you go into, and even which stores you go to, which cinemas you go to. All of that is possible right now. So the ability to see what people do in response to what they see is all there. Penultimate point, creating a new media brand is likely to remain a challenge. So being known for a range of different diverse media content is going to be hard. And the last point I'd make is traditional media, digital innovation, it's not a zero-sum game. Everyone can win if you understand what each player has to offer. So that's what I wanted to cover off for this introduction. And thank you again to Al Jazeera for inviting me to speak here. And I will hand over now to the host and for the panel discussion. So thank you very much.